the plinth and foundation, all this has to be added to the building value. So in this example, 50 lakhs includes the compound wall as well. Plant and machinery is 1.5 crores. Here again, like I said, it can be erected machinery, it can be movable equipments and machinery also. So for this, it's very easy to fix the market value or the reinstatement value, because you have the list of machineries, you will have the invoices, you know the age of the machinery, you can easily fix the sum insured. Then stocks. When you take stocks, in this case it is 75 lakhs, you have to add the value of raw materials, the stock in process, like I said, and the finished goods. And most important is packaging material. Again, this is something people miss out, because it's not part of their stocks. See, every package manufacturing unit will have a huge amount of packaging material. It has to be considered under stocks, right? Because whatever they manufacture, finally the finished goods has to be put into either a box or into some covers, or into some branding parcels. Packaging material is something that the corrugated boxes especially, it's a huge value. You need to consider it under stocks. Other contents, like I said, furniture, fixture, fittings, spares, other store items, any miscellaneous items, all these are listed and taken as 22 lakhs. So it's simple. I mean, so you have the breakup of sum insured and you know the total sum insured of this particular proposal. The total is 50 plus 1.5 crores plus 75 plus 22 lakhs. 2.97 crores is the total value of the property, and that becomes the sum insured. So it's always good once you arrive at the breakup and you total it, it's always good to keep a certain margin and add 10-15% more, so that you're sure, even because of inflation or missing out of certain items, you are completely covered and there is no question of underinsurance. So always keep a margin after you arrive at the breakup and add at least 5% or 10% of the total value and arrive at the final total sum insured. So now we saw the occupancies, we saw the basis of sum insured, right? So for building, it is market value or reinstatement value. For plant and machinery also, it is market value or reinstatement value. But for stocks, it is clearly only market value. There is no concept of reinstatement value, right? This is clear, right? But only thing in stocks, the word that you need to remember is peak value and not the annual turnover. This is something you need to fundamentally understand as far as fire insurance is concerned. Now moving ahead, like I said, one of the main important tasks of underwriting is to accept the risk. We saw that, right? So accepting is the first step. How do you accept? You need to analyze, you need to evaluate, you need to assess the risk for fire insurance. So like I said, the information that is given in the proposal form or even the special questionnaire form that is given by many insurance companies, it's called an risk inspection report. So risk inspection, like we already saw the role of risk engineers, they are the eyes of the underwriter, right? So you may appoint a risk engineer to come up with a detailed risk inspection report for very large risks. But if it's, let's say, 10 crores or 50 crores or smaller risk, SME, most of the times the marketing department itself does the risk inspection, or the broker, or whoever is the intermediary, the bank. The entire information will be collected from them, or the insured himself can give. But you need a certain framework of what are the information, material facts that you need to assess the risk. Now, these material facts, apart from what is being asked in the proposal form, there is one easy way to remember this, which is what we used to follow in my company. So I'm just sharing it. But like I said, different companies have different methods of doing risk inspection. But this, I thought, is easy for you to remember. You will not miss a step if you remember these 5 letters. It's called MCOPE. MCOPE. I want you to understand this terminology, which is called MCOPE. There are 5 important aspects of risk evaluation. Who is the management? Which means the owners, the proprietors. What are they? Are they a branded company? They are the people who put in a lot of money into their business. Do they have multiple businesses? How much they focus on their business growth? Right? How has been the track record of that group? The management itself will speak a lot about the uh, evaluation of the risk, how professional they are, how business savvy they are, how efficient they are, right? Then comes construction. Like we already saw, what material goes into construction is very, very important. How many, we look at these points. Occupancy, we already saw so many occupancies. What is the occupancy is very important for evaluating a risk. Prevention. So if at all there is a fire, what are the preventive steps that the client has taken in terms of fire extinguishing appliances? What is it that they're done to reduce, whether there is a fire engine, right, which is close by to the risk location, fire station which is close by to the risk location. What is the availability of water supply?